So let's take a look at multi-time frame market structure in action. We're just going to build upon all of the swing, well, mainly the swing structure, right, that we've drawn on our 4-hour charts, and we're going to build that across the multiple time frames. So the 4 time frames that we're going to concentrate on in this exercise is the weekly on the top left, and then the daily here that we have on the bottom left, and then the 4-hour on the top right, and then the 15-minute, the M15 in the bottom right hand corner. Now, obviously, having split screen like this is very useful for multi-time frame analysis when you can see multiple time frames together. Now, when you're in a live market, you do not need to have your chart split this way. Some of you may find it useful to have it that way. Some of you may just prefer to have one big screen and then cycle through between. But if you do want to have the split screen, then essentially this is where you can choose to do that. However, I do believe that you will need a paid tier subscription with TradingView in order to be able to have more than one chart, I believe, especially if you kind of want the 5, 6 or 8. I do think you need then potentially even need premium. But anyway, let's start to dive through this. So as always, we're always going to take a top down approach, right? We're going to start from the top and then we'll slowly work our way down through the time frames to increase that timing and accuracy. So hopping on the weekly chart. Now, one thing I will always recommend that you do is, no matter what time frame you're on, right, is never just jump straight into the sort of the most recent price action, sort of when you're trying to, define a trend, because what you really need to do is build that story and build that narrative. Now, when you read a book and you read a story, what do? You read from left to right, right? You start at chapter 1 or, near the beginning. You don't just jump in right at the end at, chapter 98 or whatever. Okay, it's kind of the best analogy I can come up with of how, especially when you're defining market structure, you really need to make sure that you do have your highs and lows defined properly, because sometimes, you could be really zoomed in thinking, that this was, potentially a higher high and a higher low and whatnot, but actually really it's just substructure that you're playing within another range. So if we take a quick zoom out, Forex.com data feed doesn't go back too far, about 2006, but we can clearly see, right, that this was that big bearish move there where we had a swing high and a swing low down here. Now, if I draw this line across, we can pretty much see, just snap that on, that we got a closure below that low there. So what that means is that that formed a lower low, right, with type 1 mapping where we get a candle closure below the low. So where is the highest point before that low broke? Well, it would be this point up here. So we can get rid of that for the second. So then what we can see is price obviously broke up above that high, and then forming a clear higher high. So the weekly chart then switched bullish. We had a pullback, break of the higher high, so another higher high, but then price came down and took out that low. So then we were bearish for quite some time before then eventually price then took this high here, right? That was the low, that was the high. Price took the high, price temporarily switched bullish to form this higher high, but then it came down and it closed below the low, so it quickly switched bearish again, right? Quite a bit of volatility that we can see here. So at this point, once this low was taken, this is the swing high of the range that we're playing within, right? This is the swing low, but then eventually price did move up. We had those sort of minor breaks of structure, and then we got that candle closure there to then switch bullish again. And then this time it actually followed through with that momentum. It had a weekly pullback, and then it took out this high here, right? So now we are playing within this high here and this low here. So that's how you can kind of quickly, it doesn't take a lot of time, but you can still go quite far back and just make sure you definitely do have your highs and lows marked out correctly here. So what I tend to usually do, especially with the weekly time frame, is just mark out the range of the high and the low that we are playing within. So have some pre-saved templates here, and we can draw on, I can get it selected, there we go, draw on our weekly high up here and put that in. So now we know pretty much the range that we're playing within the weekly chart. We are clearly bullish, we're playing within this bullish range. So obviously, after we had, let me draw on the weekly breaker structure over here. So I'm just going to quickly put that on because I don't have a pre-saved template for the weekly chart, and then just put that in the middle. Okay, so we had our weekly breaker structure. We've obviously then, initiated that weekly pullback, and we're playing within this weekly bullish range. So at any point in time, we have to run with the blind assumption that this should be a strong weekly low, and this low should hold. And at the moment, this is a weak weekly high. Why is it a weak weekly high? Because it hasn't taken out the low, right? So at any point in time, we can expect a weekly high low to kick in and potentially run that weekly high. Of course, it doesn't have to happen. We're always playing with probabilities, and this weekly low could go, and then we could switch bearish, okay? But for now, purely just using, the concepts that we've looked at so far with market structure. This is the tools that we're using. We can run with the assumption that this weekly bullish range is going to stay intact, and we have to be aware that a weekly high low could kick in at any point, and the weekly could try to make a move for this weekly high to try and form that daily high, right? So that's the weekly chart playing in a very clean, sort of simple bullish range here. So let's dive down a little bit into the daily chart down here. I'm just going to tidy this up a little bit just for my chart OCD there. So what do we expect after that weekly break of structure, that weekly high? We expect a weekly pullback, right? How can we know when that weekly pullback is about to kick in, right? When this run is over and the pullback's about to kick in, we can look for that change of character, and how will that look on the daily chart? I'll just show you at the same time, right? If we look for a weekly change of character, let's zoom in and have a good look at this. So price, all of these candles break the prior candle's high, right? This candle fails to do so, so there's a minor pullback there. Then we move up again, then we have a minor pullback here, right? And then we move up, and then we come down and we take out that minor weekly low. So what is that minor weekly low most likely going to be on the daily chart? It's most likely going to be a swing low, and then that weekly minor low, right? That change of character on the weekly chart actually is a trend change on the daily chart, because if we look into the daily chart and zoom in on this price action, what do we have? Well, we have price trending to the upside. Clear swings in price action, right? Higher low, higher high, pull back to form the higher low. We break that high to form a higher high, right? And then this would be our swing low down here. So then price comes down, and then we get that candle closure below there on the 18th of January 2021. And then that gives us a bearish daily trend change, right? Which then gives us decent confirmation that the weekly chart is now likely to have that weekly pullback, right? How far can we expect potentially that weekly to pull back? Well, we can draw on the premium and discount of the weekly range, right? And then we can expect price to potentially pull down into discount prices. But let's just draw on our daily breaks of structure here, right? So for me, this would be a daily swing high. So just going to map that out, right? And then this is where, right, price moves up. Now it gets that break of structure, and then the daily does switch bearish, but it's pretty much only for one candle, for one day, and then it retraces and continues that up move. So for me personally, I view that just as one swing leg, right? And this is just a minor low. So for me, the daily chart is not confirmed bearish until we get a break of that low, which we don't get until the, what was that, the 15th of January, yeah. So then the daily switches bearish. But just from a daily chart perspective, right, how could we know, or what do we expect, I should say, after a daily break of structure to the upside? We expect a daily pullback. How do we know when the swing run is likely to end and a daily pullback's kicking in? We get that change of character there, right? So that at that point gives us an indication that obviously the pullback's kicking in. We've obviously pulled back quite a fair bit at that point. But if you're expecting, right, a weekly pullback, then we can potentially anticipate that this is not just going to be a daily pullback, but actually we may get a full-on daily bearish trend change, because the daily is likely going to need to switch trend. The daily is likely going to need to switch bearish in order to facilitate a full weekly pullback, right? Which is what happened. So you can see that weekly pullback, right, first on the daily trend change, right? But then how could we have anticipated that even earlier, right? Well, what is that daily change of character, that daily minor break of structure? What do you think that will look like on the 4-hour chart? Well, if we go and scroll across, right, and what I'm going to do is mark out that daily change of character here. So I'm going to draw that across, and I'm just going to change it to a dotted line just so we can see the difference. But what is that 4-hour minor break of structure? That daily minor break of structure, that daily change of character. On the 4-hour, it's a 4-hour trend change, right? Because this was our swing high, right? We got the pullback, and then we got that break of the high. So this, taking out the 4-hour swing high here, just line this up, right? So then the lowest point before that high broke there is this point down here. So then that becomes our 4-hour swing low. So then when price comes down and closes below that 4-hour low to make the 4-hour bearish, we then get that daily change of character, right? So we can anticipate literally the weekly pulling back all the way from the 4-hour chart. Now, of course, the 4-hour chart could give you a few full signals before that potentially happens, but it's just showing you that you can anticipate that happening. But obviously, the higher the time frame that you wait for to get that confirmation is the more high probability that you are going to have anticipated that the weekly pullback is actually starting. So it's not until we get that daily that daily bearish trend change down here, right, on the 15th of January, that actually we then get that weekly change of character there, right? But the 4 hour had already switched bearish all the way up here, and we already had a 4 hour change of character up here, right? So you can anticipate it earlier and earlier, but you just have less confirmation, because there would have been quite a few 4 hour changes of characters, all the way up, like, let's have a look. Potentially over here, right? But it was a full signal in terms of trying to signal that the weekly pullback was going to kick in, right? Because the weekly stayed bullish for another few days. But anyway, let's take a look and just concentrate on the daily chart for now, whilst we are seeing how far the weekly chart is going to pull back. So we get that break of the low, and then we have this pullback here, and then we break the low again. So then we get another daily bearish trend change here. Sorry, not bearish trend change, we get another daily break of structure. So now what we are playing within, we are playing within the highest point before that low broke. So we are playing within this range here, and obviously when price pulls back, that would be our low there. Now, what does price try to do? Price does try to break up through that high, right? You can see intraday, price would have been trading all the way up at this level here. But this is where it's really key, no matter what time frame you are on, to wait for the candle to close, right? If you are using type 1 mapping and you are using body candle closures to denote your true breaks of structure, right, to denote your swing higher highs and higher lows, then you need to wait for the candle closure. So at this point intraday, right, you could see a lot of momentum coming up, and you could think, right, the daily switching bullish again, and you can get really attached to that bias, right? But actually you have to wait for that daily to close, and we can see that it failed to close above that high. It essentially was just a liquidity grab, and we are still remaining bearish at this point, right, because we have not closed above that high to form a high. So generally when this happens, right, if it's a move to the upside and then we close back down, generally that's a very bearish signal. But how can we wait for a little bit more confirmation to tell us that this will be the daily lower high, right? Because obviously we can see that price did go on and continue the bearish trend, and we did get another bearish break of structure. But at this point here, we're not going to potentially know that. So what can we do to give us a bit more confirmation and increase the probability that this lower high has formed? Well, we can wait for a daily change of character, right? So as we can see with that pullback, we had the movement up, we pull back, then we broke that minor high there, right? Now this is where it's a bit more subtle, but you can see this candle here on the 24th of February, it failed to break this candle's high here, the previous candle. So what that means is it was an intraday pullback, right? It was that minor pullback. Then we took that high, we failed to close above the swing high, right? We closed back down, and then what happened? Price came down and it took this minor low. So we've got a daily minor break of structure pretty much, right? We've got that change of character. Now, what do you think, if I mark this out, that daily change of character there is going to be on the 4 hour chart? You've guessed it, hopefully. That 4 hour, if I move across, right, we've already marked this price action out in the prior lessons, right? That 4 hour, or I should say that daily change of character with that dotted line was the 4 hour trend change, right? And you can see we get that confirmed 4 hour trend change there. I'm just going to delete the daily dotted line now. And that's how you can see how they sync up. But you could have anticipated that even earlier, right, when we saw the 4 hour change of character there, right? So it's just showing you that relationship between the different timeframes here, and of how you can anticipate those moves starting to kick in. So let's continue this daily bearish trend and draw on our structure. All right, as the daily clearly continues to be bearish, and then price pulls back. So let's mark on our next daily swing low here, just try and speed things up a little bit, and we can see that that bearish trend continues, right? So we were playing within quite a large daily range there at that point, right? Because that then would have been our high and this would have been our low. It was a bit of a short pullback. Let's have a look on the 4 hour chart and see how that looked and sync these all up a little bit better. So this is obviously the daily range we're playing within, right? Within those two big orange lines. The 4 hour chart starts to pull back, so that's when we marked out, remember, that 4 hour change of character. And what does that do? That signifies that that daily pullback is starting to kick in, but then we've got a 4 hour change of character to the downside, potentially signaling that that daily pullback is over, just a shadow pullback, and now we can start to target that weak daily low, which was also a weak 4 hour low. And as we can see, price then eventually broke down and went through there. So then we were playing within this daily range here, right? That being the highest point before the daily low broke. And then when price is coming down, right, how can we anticipate when this swing run is over, when the daily swing run is over and the daily pullback is about to commence? Well, we can look for a daily change of character, right? So after that daily break of structure to the downside, we are expecting a daily pullback, right? So then we see that minor high because that previous candle failed to break the previous candle's low, so it's a small pullback, and then price takes that high, which is our daily change of character. So if we mark out the daily change of character, right from there to there, just think up a little bit, what will that daily change of character most likely be? It's not guaranteed, but most likely that daily change of character is going to be a 4-hour trend change. So we can see where that dotted line is over here on the 4-hour chart, right, which represents that daily change of character, was actually where we had our 4-hour trend change, right? So that 4-hour confirmed bullish trend change is where we got the daily change of character, okay? And, you know, we spoke about this before, but how did we, when we were looking at the 4-hour being within this bearish range here, right? We had the 4-hour breaker structure here. When we got the break of that low there, what do we expect after a 4-hour breaker structure? We expect a 4-hour pullback. How can we anticipate that the swing run is over and the 4-hour pullback is kicking in? We get that change of character, right? We take the low and then we take the high, giving us that change of character, pull back in to form that internal high low, right? And then we get minor breaks of structure. But at that point, the 4-hour is still bearish. So we have to kind of run with the assumption, at least just on the 4-hour time frame, that 4-hour lower high will hold, that swing lower high, right? So then we were looking at the changes of character coming back to the downside, right? And we'll talk about that in a little bit more depth at that moment. But when we were anticipating that 4-hour pullback kicking in and we got that 4-hour change of character, what do you think that 4-hour change of character was on the 15-minute chart? Well, this is the 15-minute chart down here, and if we zoom in, right, you can see this dotted line here. I'm just going to tidy it up a little bit. That's where the 4-hour change of character was. But let's quickly draw on our 15-minute trend, right? So we're bearish, right? We come down, we form that low, so that's clearly our swing low there. So let's mark on our 15-minute bearish break of structure, and then we draw that across. Put on my M15 break of structure there, right? Now, where was the highest point before that low broke? It was this swing high there. So just going to mark that out just so we can see it. Right, so that's our M15 swing high, and then price comes up and then takes that high, it's making the M15 switch bullish, right? So when we were expecting that 4-hour pullback and we're waiting for that 4-hour change of character, generally, not always, that will be a 15-minute bullish trend change, which happened a little bit higher up, right? So the 4-hour chock was there, but it continued up and it pretty much happened in the same area. So it's not always going to be picture perfect, but it just gives you a rough indication of what you're seeing on one time frame will most likely be happening on the lower or higher time frame, right? Now, that's when you get that 15-minute switching bullish, right, giving us a lot more confirmation that that 4-hour pullback is kicking in. But could we have seen that potentially even earlier? Well, when we got that 15-minute breaker structure to the downside, right, how can we anticipate that the 15-minute pullback's about to kick in? We got a change of character, right? Because if you look at the 15-minute, right, we had that minor low there, draw that across, put that as our 15-minute change of character, and then what happened? It took the low, and then it took the high. So there we got the 15-minute change of character, price then pulled back in, right? If I can get the paintbrush to work, right? So we got the pullback in to form that 15-minute internal high low, and then that anticipated the 15-minute pullback, which then turned into a full-on trend change, which then ended up being the 4-hour change of character, right, to initiate that 4-hour pullback, which then ended up leading to a 4-hour trend change, which ended up leading to the daily change of character, right, to initiate that steeper daily pullback, which ended up leading to a daily trend change, right, which then ended up potentially or trying to form that weekly higher low, right? So can you see how it all started from down here on the 15-minute time frame? And of course, if we were to go lower on the 1 minute and so on and so forth, you'd have seen that all change first. And all that was trying to lead up to, as you go higher and higher, is just to form that weekly higher low, right? Because we're bullish, we've pulled back down into the discount, and then trying to anticipate where that weekly high low may be forming, right? You can then use all the timeframes together, but obviously the higher you go, right, the more confirmation that you're going to have that actually this is the true weekly swing low. Because if you're, looking at, let's tidy this up a little bit and get rid of these lines. If you're looking at the 15-minute chart to tell you when the weekly high low is going to be forming, right? The minute that we break through the EQ and we're within discount prices, and you're saying to yourself, okay, the weekly's bullish, I want to try and catch that weekly high low. If you're just sitting on the 15-minute and you're trying to, look for every change of character or even bullish trend change, right? It's going to happen a lot, and you're going to keep, taking losses and losses or a load of break evens, because yes, you can get in early and you can, literally catch potentially what may have been that weekly high low, and you could have got in right at the very bottom, post a nice little MT4 screenshot on Instagram, show off to all your pals or whatnot. But actually, you didn't show how many losses you took in the meantime, the amount of grey hairs that you've got trying to catch that low. So whilst it is doable, and of course as we start to introduce more concepts and tools throughout the course, liquidity concepts, supply and demand, etc., that can increase our probability of knowing when to try and do that. But for now, purely just concentrating on market structure, you can see that just waiting for more confirmation, the more confirmation you wait for, the high probability you're going to have of knowing that that weekly high low, or at least a weekly run, is about to kick in, and then you can hold on to trades with a lot more conviction and confidence and a much higher strike rate, right? Because even though we get that change of character down here, you have so much opportunity, right? There is literally no need for fear of missing out, right? To then capture on what ends up being a huge move. And there's just going to be, you can literally just wait for the daily chart, right? Because the daily chart doesn't switch bullish until all the way up here. So you might want to wait for that daily chart to switch bullish to then actually give you a lot more confirmation that the weekly high low is in place. But look, you're still going to get days and days and days of intraday entries to then look to capitalize the rest of that weekly move, right? But all of it, you can see here, happened first on the 15-minute time frame, right? Remember what we were saying about the 4-hour chart at that point, right? We still have to assume that the 4-hour chart is bearish because this is still a 4-hour strong lower high. So even though we're pulling back, when we get that change of character to the downside, we can be looking for shorts to target that weak 4-hour low. But then what happened, remember, we had that minor move, and then we took the low, and then we took the high, and we had that 4-hour change of character again to the upside. What was that 4-hour change of character over here? It was the 15-minute switching bullish again, right? So then at a minimum, we can target this weak 4-hour high, but it ended up changing to that 4-hour trend change, which gave us our daily change of character, right? And then we move higher. But at that point, right, then we're still playing within this bearish daily range, and we have to assume that this daily lower high is going to hold, right? So let me zoom out on the 4-hour chart so we can see how this syncs up a little bit better. So as price is coming up towards this daily lower high, right, and this is kind of a good point to talk about, having a trend bias but not being attached to the outcome either way, letting all of the timeframes give you that confirmation, and being happy to trade in both directions. So you may have a daily bearish bias, right, but you're still happy to look for longs and look for shorts, but you use that trend bias just to manage your expectations potentially of how far to try and push those trades, how far to try and manage them. Okay, so as we come up into this daily lower high, right, people who are not understanding market structure, or you don't have a firm grasp of multi-time frame analysis, right, what are they going to see? They're going to see price come up to this daily lower high. They're going to see this bearish daily candle close. They're going to pretty much see a triple top, right, a 1, 2, 3, and they go, okay, that's a lot of confirmation, I'm going to try and short. And then what happens? They get absolutely smashed, and then we see that volatile move to the upside. Okay, and it's because they're not understanding where are we in the weekly chart, right? We're in weekly discount prices. The 4-hour has switched bullish, right? Obviously the lower time frames all switch bullish. So when we get into this area and we're expecting that daily lower high to form, right, what happens? The 4-hour never switches bearish, right? We get that move, 4-hour pullback, and then we continue straight up. So this is why, if you want that extra confirmation that the daily lower high is going to form, then drop down to the next time frame, and ideally wait for that 4-hour to switch bearish, right? So on and so forth. And then obviously we have that continued 4-hour bullish trend. So the daily is now bullish at this point. So what do we expect after a daily break of structure? We expect a daily pullback, right? But this is another key point I want to make is, if you're setting your charts, right, and actually the daily break of structure actually happens just there on the 16th of April as it closes above. Now from the 16th of April, if you say to yourself, okay, I've seen a daily bullish break of structure, what do I expect? I expect a daily pullback. And then you just sit on your hands this entire time, right, waiting for that pullback to kick in before you even look to get long, right? You're going to miss out on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 2 weeks worth, about a week and a half's worth of potential intraday opportunities to still trade that daily bullish run, right? So, you don't have to, but if you are more of an active trader and you are looking at intraday moves, right, you can be aware in the back of your mind that there is a daily break of structure and we're expecting a daily pullback. But that doesn't mean you have to sit in your hands for another 2 or 3 weeks, right, and wait for to the 5th of May all the way from the 16th of April to then look for pro trend longs again, right? You can keep taking longs, but why this knowledge helps you that you're expecting a daily pullback is that you're not trying to swing for the fences and really push this another however many pips, because you're expecting at any point that daily pullback could be kicking in. So what can we use purely just from a market structure viewpoint to tell us that that daily pullback may be kicking in? Well, as you can see, if you look at the minor price action, right, there's minor pullbacks, it stays bullish the whole time. Then we get that change of character here, right? That's the first time there's that sign of weakness on the daily chart where we get that internal lower low, right, on the 30th of April, and we get that change of character. So if I draw on that daily change of character, what most likely do you think that will be on the 4-hour chart? It will most likely, not always, be a 4-hour trend change. In this case it was, right? If we zoom straight in over here where we have the dotted line for the daily change of character, that is where we got that 4-hour bearish trend change, right? So after we had that huge daily move, we then get that 4-hour bearish trend change. Now if you remember what we spoke about this section of price action back here when we just looked at one time frame, right, in the basic market structure walkthrough, we knew that although the 4-hour switched bearish, because of understanding on the daily chart now that it's just a daily pullback, right, that we can't expect the 4-hour bearish trend to necessarily last that long, right? We can't suddenly go, okay, the 4-hour switched bearish, now I'm going to expect a bearish trend that just lasted as long as that bullish trend there, right, and have a really deep move down here. Why? Well, because at any point it's just a daily pullback, it's just a daily correction, and that daily high low can be kicking in. So this is where multi-time frame analysis really starts to play its part, right? Especially when the weekly's bullish, and at this point we would be anticipating that that would be the weekly high low, and would be then anticipating that this weekly high is going to get run, and we'd be looking for that move there, okay? So when you see that 4-hour bearish trend change, you can't just start swinging for the fences with all your shorts and then wondering why, you took a break even or you're giving all that profit back. Well, that is why, because it's just a daily pullback. Also as well, hopefully as you guys start to do more and more testing with your premium versus discount, you will see, especially on different pairs, right, when we first get that initial trend change, right, because obviously the daily was bearish for quite some time, and then we switch bullish, right, how often does that first pullback after a trend change come all the way down and towards the discount, right? How often do we get a very, very deep pullback after we get that initial trend change, especially when that bullish trend change is with the weekly trend, right? Because then that's a lot of momentum, the weekly and the daily chart, right? And we're expecting that move. So you can use all of that knowledge together that when we get that daily change of character, when the 4-hour switch is bearish, that is not likely to last long. That's probably just going to be a short little correction, a short little retracement to then continue that bullish move. But then obviously, of course, as we go on and we start to get later into that weekly run and we get later into the daily trend, right? And each time the daily breaks a high, right, what's happening? We're struggling, we're retracing straight away. We break the high, we retrace straight away, and then we're kind of struggling to break these minor highs, right? And that's eventually why it then leads to reversal, because you can see the bullish pressure, that demand starting to run out, right? And sellers starting to step in every time price breaks a high. Okay, so let's just draw on the rest of our daily structure. So we get that daily pullback, which is then what was confirmed, right, with the 4-hour trend change. Then how can we start to anticipate where that daily high low is? Remember, it's not always going to come down to the premium, down to the discount if you're bullish. So let me mark that leg on, right? And this is what I mean by premium discount. It's just a tool, right? It's just to help us to increase probability. Now, it's not a strict requirement for me. I don't have to wait for price to move into the discount in order to look for longs. I'm happy to trade in the premium, right? It's not as high probability, but I'm happy to, because otherwise I'm going to miss out on a lot of potential moves, okay? So what can I use to tell me if price isn't in the discount, how potentially that daily high low may be in place? Well, the 4-hour is going to switch bullish, right? And then we can wait for price to come up here and switch bullish again. Or maybe we can anticipate it a little bit earlier and wait for that 4-hour change of character. What will that 4-hour change of characters be on the 15-minute? If I scroll all the way up across, whoops, and we go over there, right, down here. So that was that 4-hour change of character over here, right? What is that in the 15-minute chart? It's the 15-minute switching bullish, right? So hopefully, you can really see how they all interrelate to each other. But let's just try and kind of stick to daily charts now, so we don't get too bogged down on all the price action, because I do want to kind of cover this to where we are currently in the market. So for me, we get that daily break of the high, just miss one, and then another swing high there, right, after that pullback. Now, this isn't the most, the largest of pullbacks, but this is where you kind of, and this will come with experience, you have to read what's relative to the current price action. Because obviously over here, right, we had these big, right, that was a minor pullback, and it's a big swing in price. Then we have the pullback, and it's a big swing in price. And then we have this big leg here. But then you can see the pullbacks are getting shorter. We break the high, and then we get a pullback, right? So that's what's happening here, right? It's smaller pullbacks. You kind of have to read it that we're starting to move quite correctively now. So for me, that is enough of a pullback, as it's relevant to the most recent section of price action. But then here, when we break that daily high, right? I wouldn't classify that as a swing move, even though we do pull back and then we close above that high. If I zoom in a little bit more, right? That for me is not enough to be a swing pullback. That is just a minor pause in price action, right? That would really be the 4-hour swing in price. For me, that is one big daily move up. So at that point, we are playing within this bullish daily range here. Okay, so how can we anticipate that daily pullback? Well, we can look for a daily change of character, which is what we get here. What is that daily change of character going to be? It's a 4-hour trend change, right? And then we get that 4-hour trend change over there. Then we get the 4-hour break of structure. We look for the 4-hour pullback, right, to form that lower high. And then how do we anticipate that that 4-hour lower high is over? We wait for a 4-hour bearish chock, right? That bearish money break of structure back in line with the overall 4-hour trend. And then if we go over to the 15-minute chart, right, how could we see that even more? What will that 4-hour over here, what will that 4-hour bearish chock be on the 15-minute time frame? It will most likely be a bearish trend change, right? So we can see this was our swing high here, this was our swing low, right? It's the lowest point before that high got broken. Pricing comes down, it just about closes below, and that gives us our 4-hour change of character. The 15-minute is now confirmed bearish, right? And then we can start to look to target that 4-hour swing low, right? But this whole time, the daily is still bullish, so we do have to be aware that potentially a daily low could kick in, and we could get, you know, that next bullish break of structure to the upside, right? But if we continue to look at the 4-hour price action, right, and if we just wait for the 4-hour to switch bullish before, you know, it tells us that the daily is going to form that high low and go, then we can see that it never does that. Or we can continue to kind of milk that 4-hour bearish trend, and then eventually we do get that daily break of structure, and we do get that daily bearish trend change, right? Now, when we get that daily bearish trend change, we get that closure down here, right? The daily's now bearish, we're expecting a daily bearish trend. But what's happened on the weekly chart? Well, the weekly is bullish, and we are expecting a weekly higher low to kick in. But then as the daily switches bearish and we start to come down with a lot of momentum, right, down here, that can clearly show us that the weekly failed to take out the high, right? It failed to even close above this minor high here. So that instantly gives us really good, solid information, a very high probability, not a certainty, but a high probability that this is a weak weekly low, right? So now we can work with the assumption that, especially with the daily switching bearish, that's a very high probability to try and target this as a nice swing target and try and place shorts all the way down and towards running this weekly low, right? Now, price could very much still come down here, right, and go, because until we get a closure below this swing low, we are still bullish. Now, of course, that doesn't have to happen. We can still come down now and switch bearish, right? But the whole point is all the way up here, right? How many pips away is that? If I get rid of that, and I mark it from, okay, so it's around here. You know, roughly that is, you know, 340 pip target that you can start to take advantage of, and potentially you've got in with a 10, 5, 4, 3, 2 pip stop, right? You do the math on that. That is a hell of a lot of potential reward to risk, but you're using logic, right, and just very sort of, you know, I don't want to say basic, but simple market structure knowledge of, okay, where is our trend? Where's my strong highs? Where's my strong lows, or my weak highs and my weak lows? This should be a strong higher low. We're anticipating it to be that, but when it fails to take out that high, it starts to switch bearish. Then we're bearish on the daily, the 4 hour and the M15 with a hell of a lot of momentum. We can then go, okay, well, it's very likely that this weekly low is going to get run, and now we have a very clear swing target to start to aim for price to get down to, right, long term. Okay, so yeah, I mean, even though this price action, if we dive back in, right, I hopefully kind of start to drive the point home. But, you know, if we drive down to this bit here, okay, we get the 4 hour break of structure. What do we expect after a 4 hour break of structure? We expect the 4 hour pullback, and that's where we got the 4 hour change of character. Whoops, we can get the paintbrush, there we go. The 4 hour change of character down here, right, took the low, took the high. What is that 4 hour change of character down here? It's a 15-minute trend change, right? So you can see it again and again and again there. Did we get, yeah, we just about got a 15-minute change of character there, I believe. Let's zoom in and have a look. Right, so you can anticipate it even earlier. So yeah, just about took that low there. All right, so took the low, and then, you know, it depends on how aggressive you want to be. It's a bit more of a minor pullback here, so you can have that as your high. Then took the low. Sorry, I'm drawing this wrong again. That's the high there. All right, when we took this low, where's the highest point in terms of the internal structure? That would be your high. There's your change of character, and then obviously a lot of momentum kicked in, and then we went, and then we got our 4 hour pullback. How do we know where that 4 hour lower high is going to hold? Obviously we can look for price to come into the premium, which it looked like it did. We get that 4 hour change of character to the downside, giving us indication that the 4 hour lower high is in place. What do you think that 4 hour change of character most likely will be on the 15-minute chart? It will be the 15-minute switching bearish, right? High, come down, we then take the swing low, right? And then we switch bearish, wait for the 15-minute pullback, and then we can target the 4 hour low down here, right? And then it'll be the same thing again and again and again, right? Now, daily clearly bearish at this stage, right? A lot of momentum. Now, if you try and trade when this is happening, you see this momentum, right? And you're trying to change every bullish M1 change of character, every bullish trend change, or maybe even every M15 change of character, eventually you're going to catch this move down here right at the low, right? Because if we scroll down on the 15-minute chart, right, what do we get down here at that daily swing low? We get that minor pullback, and then we get a minor pullback here, right? So it takes the low and then it takes the high. So we get that 15-minute change of character. We're then playing within this internal range, right? We come back down into that low, and then what do we get, right? So that inside bar is a pullback. We come down, we then take that high there. So then we have another, bullish change of character within the change of character, just to give you even more confirmation that this low here is going to hold and the M15 pullback is about to kick in, right? Price moves up, comes back in. We can then look for longs down here with a lot of decent confirmation, at least from an M15 perspective, and then play that move there, which then ends up catching the daily higher low, right? Sorry, the daily lower low, catching the daily pullback. So it will, again, happen first on the M15. But if you did that and you took every single bullish M15 change of character, right, and you're trying to fight all of that momentum, if you did it over here, right, because there was technically an M15 bullish chock there, right, because we took the low and then we took the high and then you could pull back in, yeah, maybe you can move to break even pretty quickly, but you're just going to get smashed and just take a lot of losses. It's not worth it. So, this is where if you see the daily moving with a lot of momentum, especially with the weekly as well, it's like a 300 pip move or something ridiculous in a few days, wait for a 4 hour change of character just to give you a bit more confirmation to want to play that daily pullback, right? So you're going to have to read when you want to be aggressive and when you won't, and that will come with time and experience, because this line up here, this dotted line, is that 4 hour change of character. What is that 4 hour change of character? It's the M15 switching bullish. So now you have, right, more confirmation to then try and play this next few days of moves. But you have to be aware in the back of your mind, right, how far do I want to push this? It's a lot of momentum. Some of you may go, well, I want to wait for price to pull back up into the daily premium, right, of that swing leg. But as you'll find from your premium versus discount testing, right, when we get a lot of momentum like that, it's the first bearish trend change, right? It's the first bearish break of structure, right? It's the first after that bullish trend change. What do we know about that? Usually that's when momentum is very high and we don't usually get a deep pullback, right? So if you're taking those longs, even though the M15 is bullish and the 4 hour has a change of character, it's likely not to last very long. So then what happens? We then start to struggle to break these minor highs, right? We break with a couple candles there. We just about close above that one, but it wicks straight away. And then we just wick that. We don't even get a candle closure above. We get the bearish chock back in line. What is that on the M15? That is an M15 trend change. We switch bearish, and now we can look to target that daily low, right? So it's not just targeting, M15 lows at this point. You can have confidence at this point that the daily pullback is now over, and we can start to try and hold those intraday entries at least down towards that daily week low, right? So on and so forth. Let's just continue to mark the daily, as I don't want this video to go on for hours. But yeah, I just think it's a very, very, very useful exercise to go through this in a lot of depth and get very, very comfortable with how the time frames are all synced with each other. So price then comes down, right? It takes quite a while. It takes a good few days, 3 or 4 days, right? It tries to close below. But this is where you have to wait for the daily candle to close before you can confirm that this is the daily low high, right? Because we don't know that until we get the candle closure on the 6th of July, right? And then we pull back. Now this, right, it's not the most convincing swing pullback, so potentially you could view it as a swing pullback, but when price is kind of moving quite small like that, right, you can have to be aware in the back of your mind that that most likely is just going to be a minor high, because then what ends up happening if we mark the daily range from the swing high to the swing low, we come back up into the premium prices, right, and then we move down further, and this was just used as liquidity, which we'll talk about later on in the course. So then we get another daily break of structure down here, and that's why, right, when we got the break of that daily minor high and we got that daily change of character, what was it on the 4 hour chart? It was that 4 hour bullish trend change, But why did that bullish trend change not last? Why was it just one movement up? And then why did we switch bearish again? Well, it's because of the higher time frames. It was just a daily pullback, right? So then when we got that 4 hour change of character down here, although if you're looking for shorts, you are technically trading against the 4 hour chart, right? You can view it as higher probability because it's still pro the daily trend, and we're still yet to target this weekly low. And when we're very near a weak high or low, it's very likely that price is going to want to run it, right? It's going to keep on going down before you're likely to see a sustained pullback or a reversal. So kind of the point I want to drive here is, yes, the 4 hour switch is bullish. It goes with a lot of momentum, and it can, be very easy to think that, we're going to start going to the moon right now. But you have to ask yourselves, where are we within the higher time frames? Well, the daily's bearish. We pull back up into the premium. We get that 4 hour change of character. So that 4 hour change of character is a 15-minute bearish trend change, and it can help us signify that the 4 hour is about to start this pullback, right? But because, like I keep saying, right, because the daily, it's just a potential daily lower high, that can give us, somewhat of a probability to actually want to target the daily low, and we can anticipate that 4 hour bearish trend change again, right? So yeah, it's just the same thing again and again and again. And then what we get that 4 hour pullback after that daily and 4 hour break of structure there. We're pretty much playing within the same range at this point. So sometimes it will sync up where that daily high, all right, and that daily low can end up potentially being the 4 hour low at the same point in time. So how can we anticipate that 4 hour bullish trend change? What do we get? Remember, this whole time it stays bearish, even with the minor lows and highs. And then what do we got? We took the low and then we took the high there. So we got that 4 hour change of character. Let's go on the 15-minute chart. What was that on the 15-minute chart? Just delete these lines. So down here, all right, same thing again and again and again. Let me draw this one properly. Nearly there, guys. All right, we took that daily low, so we got a daily breaker structure there to the downside. Oops, that's actually a breaker structure, not a change of character. All right, so where's the highest point before that low was taken? Over here, so that would be our swing high. Price then comes up and takes that swing high. So now the M15 is confirmed bullish as we get that 4 hour change of character. So the bullish trend kicks in order to facilitate a 4 hour pullback, right? In order to facilitate that daily trend pullback as well after that daily break of structure. And then this is basically how we start to build trade ideas, right? So now we're anticipating a 4 hour pullback. Let's kind of talk through this. How would I be looking at this in a live market? Well, expecting a 4 hour pullback. So now I would mark on my 4 hour swing range, right? From the high to the low, expecting price to pull back up into the premium, right? But at this point we're down here, so I can start to target up towards this point at least, right? So if we look at the 15-minute chart, we switch bullish, then we have a pullback, and we take another high, right? So that's another break of structures. We've got a double break of structure to the upside, and now we are playing within this high here, and for me, this low here, right? So this whole time, you can play the shorts, right? And you can play it down to the bottom of the range, but the whole time, the pro trend move I'm trying to look to get really is the pro M15 trend to play that 4 hour pullback up into 4 hour premium prices. So once, you can mark this out as well on the M15, right? You mark it out on every single time frame if you wish to do so. Right, so that's our range. So anywhere below this red line is the discount prices, right? So anywhere within here is ideal to start looking for that low to try and catch that next move. Now, when you see a lot of times, right, price will be taking highs, right, retracing, taking lows, retracing, taking highs and retracing. We'll talk about this a little bit more later in the course, but essentially that's when price is just ranging, it's struggling to find that internal trend, right? And we're just chopping around. And that can happen a lot when price is at the EQ, right, of a larger range. Sometimes when you see that highs and lows getting taken, it's better to just stay out, and what you want to do is concentrate on buying in the bottom 25% of the range and selling in the top 75% of the range, right? And that'll essentially keep you out of a lot of mess within here. So if you're trying to catch that 15-minute high low to trade that 4 hour pullback, right, down here is going to be the highest probability area to look for that move. But if we just concentrate on market structure, what happens? Price comes down and it tries to form a lower low, right? It tries to break that M15 swing low, but it fails to close below. So that's a really good warning sign, right? That's just grabbing liquidity, right? It's failed to try and push lower. So it's very likely now that that's a bullish sign and we are going to get that move there. So when you see that, right, the M15 failed to close below, you could literally be on the M1 time frame, right? The 1 minute, you could look for an M1 bullish trend change and you could start to anticipate that move. But if you try and take every M1 bullish trend change, sometimes you're going to get full signals, okay? You might get high risk reward, but you might get full signals. So what can we do to increase the probability that the M15 high low is in place? Well, we can wait for the M15 change of character. So we get that movement down, we get that pullback, we get the break of that low, which means that we have a minor high here. So then price comes up and we get that change of character over here. So now the M15 has had a bullish change of character, which is in line with potentially anticipating a bullish M15 high low is in place. So then we can wait for the M15 to pull back, right? Again, you can just mark out this internal leg here, right? You can wait for price to pull back into the discount, and then we eventually get the move. Now it chops around for a little while, and you'll see this a lot on the M15, and the reason why is because this is during the Asian session, so it's typically when volume is quite low, but then during London, right, it dips again into the discount, and then what do we get? We get that change of character, right, where it takes the high, and then we're off, okay? And that is essentially where we would have been looking at that whole time from when the M15 tried to form that higher low. We got the change of character to give us a good indication that the M15 high low is in place within the discount of the actual swing range. We then get that internal leg up. We then can wait for price to pull back into the discount of that internal leg, right? And then there's plenty of opportunities for entries, which we'll get into at a later date, to look for longs in here, especially during London, and then boom, you're off. And you use all of that to do what? To anticipate the 4-hour pullback up into the premium prices, right? And then we get up there, we can then look to start to see the M15 switches bearish, right, to then anticipate that 4-hour lower high is in place. So what's the most aggressive way to do that, at least from an M15 perspective? Well, it's bullish the whole time, and then we get that minor pullback, and then we take the low, right, we get that change of character, and then what happens? You end up getting and anticipating, right, that 4-hour lower high, and then we get that next move to the downside, right? So on and so forth. Hopefully this is really starting to kick in now. Even when we come down here, we just look at this last bit of price action, we get a 4-hour breaker structure. What do we expect? We expect the 4-hour pullback. Now in this case, actually no, we do. So what do we get? We get a 4-hour change of character, right? Because that is the low, we spike that low, which means I draw on the 4-hour change of character, it means we have the 4-hour high there, right? So then we get that bullish 4-hour change of character. What is that on the 15-minute time frame? That 4-hour change of character is the M15 switching bullish, right? So when price came down here, right, at this point here, get the paintbrush, to try and form that M15 breaker structure, it tried to close below and form that lower low, but it failed to do so. Then what did we get? We'll mark this out properly. We've got an M15 change of character down here, right, which then gives us really good indication, right, that we're going to get at least an M15 pullback up to the premium, up to the lower high, because that would be the M15 lower high at that point. Or we're trying to anticipate what? We're anticipating the M15 is going to switch bullish all the way from down here, because we understand that the 4-hour needs to pull back, right, and we're going to get that bigger pullback potentially up into the premium of this bearish range, right? So now when you see that the M15 fails to form a lower low, we get that bullish change of character, we get a pullback into here, right, we look for that higher low, and we can start buying. And that whole time we were just trying to anticipate this large 4-hour move here back up into the premium, okay? Right, and now it's up into the premium. What can we anticipate? We can anticipate that the 4-hour is still bearish, that we're going to get that 4-hour lower high, and we can try and look for moves to take out these lows here, right? So how can we anticipate where the 4-hour lower high is as it starts to get into the premium? Well, we just wait for it to start to switch bearish. So what do we get? Well, we get that minor movement up here, we get that movement up there. Now we pull back, we fail to form a higher high, and we take this low, it's just a substructure low. So you can remember what I said about substructure? You can still use that as an indication that we're about to switch bearish, but minor breaker structure is more significant. And where is the minor breaker structure? Well, that's the minor pullback. So when we break that low and we get that minor breaker structure, for me, that would be the M15 change of character that I would personally want to see. I don't really like using substructure breaks, so minor breaker structure is what I want to see for my change of character. Then we get that indication, right, that the lower high may be in place, or the internal lower high, I should say, on the M15, and we can anticipate, right, the M15 switching bearish, and then we can try and see if that's going to be the 4-hour lower high there, right? Now, not saying that it definitely will be, and there's other things that we need to look at to increase the probability, because we've only just pulled up into the premium, and the M15's only just had that change of character there, right? So that's the first good sign that we can start looking for shorts. But it's no guarantee. What you'll find in live market is that will happen. We can start to position ourselves and look for shorts, and we can start to target these lows. But sometimes it will literally just be a bit of a pullback, right? and then it will change character again, and it will continue up higher, and it just simply means that the 4 hour chart is just trying to pull up into more premium prices, okay? And that's okay, but we continue to follow our plan. We're not attached to it. We just wait for our setups to align. We wait for multiple time frames to start to switch bearish to give us more confirmation, right? And then we position ourselves again, and we just keep playing that game again and again and again, because, you know, I don't know for certain, no one knows if we are going to form a lower high here and run those lows. The probabilities are at the moment is that we will, but what could happen, and you have to not forget, is that we are heavily in discount prices in the weekly chart in a bullish range, right? So at any point, this weekly high low could form, especially now that we've taken out that weekly low, right? So price has now done its job, and at any point we could then go, right? But I'm not going to start taking that with a lot of seriousness and conviction, right? If I was to get in a long, let's say I entered a long trade, I'm not going to suddenly go, well, the weekly's bullish, I'm going to try and take out that weekly high. Why? Well, I have no confirmation of that just yet, because the 4 hour is still bearish, the daily's still bearish, right? The only kind of bullish time frame there is at the moment is the M15 and lower. So what I will do is I will keep essentially looking for those 4 hour and daily shorts until the 4 hour and the daily start to switch bullish. You know, once the daily starts to get that change of character and starts to switch bullish, right, then okay, now we have a lot more confirmation that potentially the weekly high or low is in place. Now, don't get me wrong, you could have seen this M15 change of character down here and taken this long down here, and you were well within your rights to swing that position and target a weekly high, right? But you just have to manage your expectations of the probabilities of when and won't that happen. Because if you are the type of trader who always tries to swing those weekly moves, you know, a lot of times you're going to give a lot of profit back to the table, okay? Now, we'll talk about management in a lot more depth later on and how we can do that. You know, we can take partial profits along the way, and we can take hedges and things like that. But really at this stage, I just want you to really be thinking about how interconnected the time frames are and how we use that to increase our probability of entering trades, right? Because ideally we want to be trading pro trend with as many time frames in agreement with each other, but we don't have to do that, right? We can like, you know, I keep saying, like Bruce Lee says, right, flow like water. We can literally ping pong these positions and trade back and forth. So we have our trend biases, but we're not attached to them. We're happy to know that the 4 hour is still bearish, but we can look for both longs and shorts. It's just knowing that the 4 hour bearish will dictate how far we try and push those moves, okay? So yeah, I guess one last thing I'll say is, you know, just looking at these 4 time frames, what do we get? If we get a 4 hour break of structure and we're expecting that 4 hour pullback, and we see the 4 hour change of character, what was that on the 15-minute time frame, right? It was a 15-minute change of character. So we see the 15-minute change of character, which then leads to the 15-minute break of structure. That 15 break of structure, right, to give us that bullish trend change was what? It was a 4 hour change of character. That 4 hour change of character can often lead to a 4 hour break of structure, a 4 hour bullish trend change, which would then give us what? That would give us that daily change of character. That daily change of character could then lead to the 4 hour, so the daily break of structure, the daily swing trend, the daily swing trend change, right? And then that daily swing trend change could then lead to the weekly change of character, right? And then that's how the changes of characters and the true breaks of structure, those true sort of swing trend changes, can give you, confirmation working your way downwards to upwards, to really give an indication of what is going to happen next. And again, I'll go over it again, right? Just to really drive this home. I know it's a bit pedantic, but see, when I'm in the live market, it's very easy to get caught up, especially with all the time frames, when you'll be looking at even more than 4 time frames at times, and you're trying to get entries on the M1. Things can be moving a lot, and you can get very lost in price action. But literally every time I sit down the charts, I say to myself, speak to myself like a baby, like I'm trying to program this into an algorithm. I follow the same mechanical framework. What are we doing here, right? Well, the weekly is bullish. Where are my highs and lows, right? That's a strong low, that's a weak high. Price is back into the discount, right? And trying to anticipate where that weekly high low may form, so on and so forth. Same on the daily chart. Where are we? Are we bullish or bearish? Are we in the premium discount? Where is my weak or strong high or low? Same on the 4 hour chart, right? So we've had our 4 hour pullback, we've had our 4 hour change of character, but where are we? We're now in the 4 hour premium. So I have to start thinking that potentially a 4 hour lower high may be forming. How can I anticipate what that 4 hour lower high may be in place? Well, we get a 15-minute change of character, but ideally I want to see a 15-minute bearish trend change just to give me a little bit more confirmation, because that bearish trend change on the 15-minute will more likely be that 4 hour change of character, right? So then you're getting more and more confirmation. So on and so forth. So I'll leave that there before this video goes on any longer. I really just think, nailing multi-time frame market structure. I know I've ranted about the importance of market structure a lot, but it is king. It becomes before everything else, and no matter what strategy you trade, it will really have the biggest determination on how successful you are, in my personal opinion. So that's why I just think it's so important you spend so much time mastering this before you even start to overlay other concepts that we are going to look at. This becomes before everything, and it's what always has my main focus. It will literally be the biggest dependent on how high your strike rate is and how high an average risk to reward ratio that you can achieve. And obviously we want to get both of those as high as possible, as that will really truly define how good of an edge that we have in the market. So do this on your charts. Hopefully you should already have the 4 hour a lot of the 4 hour structure laid out. So if you're doing it euro dollar, this is a really a good way to do it, right? Just mark out the weekly range you're in, then go down to the daily and just do all of the the daily trends. You may want to do it all at one time and then go back through, see how that looks on the 4 hour chart, right, where you have your daily changes of character. See how that syncs up on the 4 hour chart. And then when you go for the 4 hour chart and you're looking at where you had your 4 hour changes of character, right, look on the M15 and see how the M15 switches trend. But I also want you to look at a lot of times where those false signals are occurring, right, and try and get a good indication, especially with whatever pair you're trading and concentrating on. Try and get a really good feel for it of, say to yourself, do I always want to be waiting for price? If it's bullish, do I always want to wait for it to be pulling back to the discount? Or if I don't, so let's talk about this area here, right? When the daily was bullish and it was pulling back here, and we had, if I sync up the 4 hour chart, right, this is where you will really start to refine your trading, when you really start to get comfortable with this and ask these questions to yourself. Right, so when the daily is pulling back and I want the 4 hour chart to look bullish, right, because you want to try and time where that daily high low is. Well, let me rephrase this actually. If the daily is pulling back and you're expecting a daily high low and you want to get long, right, the easy thing to say is, okay, well, I'm not going to look for longs, I'm not going to look for that daily high low until it's in the premium, okay? But you want to figure out of what confluence do you personally need to see in order to kind of give you a good indication that the daily high low may be in place, so that you can take a long position and hold that long position and try and swing it to form a daily high. Now, some of you may want to see a 4 hour bullish trend change, so you wouldn't be kind of holding those longs until over here. Some of you may only want to see a 4 hour change of character, right, which would pretty much just be a 15-minute bullish trend change. Whereas others of you may, every time you get that 15-minute change of character, I mean, this isn't where it was over here, but every time you see a 15-minute change of character, right, you may be the type of trader that just wants to then try and swing it and always hold on to it, but then you have to accept that potentially you're going to be getting in too early a lot of the times, and price may want to pull back deeper, right? But it's just taking the time, getting experience, and collecting data of when you're personally going to be happy and when you can state in your trade plan of what you think is good enough confluence to then want to try and push those swing moves and have those more sort of higher time frame targets. But yeah, so what I would say is at a minimum, go through the bit of price action that I've gone through. Obviously, if you're looking at this at a much later date than when this video was recorded, then you're probably going to have a decent amount of price action, obviously to the right of the screen that you can see now on mine, and maybe just continue on from where I've done, right? Do what I've done, go over it, but obviously it's good to try and do price action that I haven't already spoken through, just so you can really practice it and go through it yourself there. Just spend lots of time, go through all the different time frames, 15-minute, go even lower, right? Look down here on the 5 minute and the 1 minute. How did this all play out, right? How could you have potentially got even earlier, so on and so forth, and just get really, really comfortable and collect a lot of data. So I hope you took some value from that. Hopefully now you can really see all the theoretical concepts that we've gone through, and now we've built our way all the way up to sort of multi-time frame analysis and how it's starting to piece together. So I highly encourage that you watch through just the market structure sections alone. Watch through all of these videos again and again and again. Try and just drill it into your unconscious, and eventually it will just feel really, really natural, especially when you practice this in the live market and you see how it develops day by day. But yeah, I'll leave that there. Have a practice. Don't be afraid to share the charts in the community if you want some feedback, and see how you get on. All right.